What's up, everyone? So, listen, we are just ending our day 2 of the Budget Reset Challenge, and I'm trying to get myself situated. Hey, I am so excited about tonight. I'm gonna hey, Chelsea, you're here. We'll give the people a few more minutes to join. Instagram says they're telling the people that we're live. You can't hear me? Oh, okay, hold on. Let's see. Is that better? Can you hear me now? Let me know. I can't hear you. Can you hear me now? Oh, I'm over here turning up my volume. I don't know if that works or not, honestly. Okay, good. Okay, perfect. Yay, you can hear me. Now, I honestly don't know what this is going to look like. The fact that I'm drinking coffee at 8 o'clock at night. I'm going to be up all night. That's going to be me. All right. Okay, so, hold on, Chelsea. I'm trying to get more people on. How do I do this? All right, hold on. I'm tagging some people so that they can join. I'm tagging some people. One moment. That's right. Tell your friends. Tell them to hop on. Tag them. Yeah, perfect. All right, so tonight we are talking about these new FHA rules, right? Hey, how are you? Hi, and we have a wonderful, she is just such a joy. Like the very first time I met Chelsea, I was like, first of all, where have you been? She is just such a light, loves the Lord, is so knowledgeable, wise beyond her years, a phenomenal real estate agent. And I'm excited to have this conversation about these new FHA rules and what does that mean for us or those of you who are interested in not just buying a house for your primary residence, but maybe you're looking to buy some investment property. What does that look like for you? And so, yeah, we're going to bring her on and we're going to start this conversation. All right, so we got some people in the room, so good. All right, so hold on. Hey. We did it. Wait, say something.
Can you hear me?
I can't, but you're low. You're low. Is it
I'm
me?
low.
Am I low?
No.
Okay.
Wait, maybe I have to girl, I don't know. You know this. Oh, wait, hold on. I'm low. Is this better?
No, I don't know. Instagram, can y'all hear her?
Okay, is this better?
No.
No. Oh, maybe I should try AirPods? Maybe. Let me get my AirPods. Hold on.
Okay. All right. So while we wait on the audio, because we want to make sure you guys can hear. Yeah, we're going to be talking about the new FHA rules. So yes, are you? Oh wait, hold on, Akila. Oh, you can hear her. You can hear her fine. Oh, she can hear you fine. It's me. I'm the problem. Oh, it's me, Chelsea. It's me. Oh Lord, poor Chelsea. It was me, y'all. I had turned the volume down. Okay. Oh Lord, Chelsea. It was me.
Oh, y'all got a lot of user error going on tonight.
It is. It is. It was me. I turned the volume down on my iPad.
Oh, okay.
Okay. You know, I'm almost
It's
50.
okay. It's okay. It's technology. Like,
Listen, the fact that you're here. Hey. All
am
right.
I
Yeah, we can hear you. We can see you. You good. You good?
okay?
All right,
I'm
now
good.
introduce yourself. Tell the people, how long have you been in real estate?
I've been in real estate since 2019, but as a realtor, I had a brief stint from 2015 to 2016 or 2015 2017 working with investment properties, so working with a company that did buy from the auction. But I grew up in real estate because my family owned a mortgage company before the '08 crisis.
Okay. Okay. So you've been
So
around this for a while.
very, very long time. And I loved it. I always grew up like, we're going to have a one-stop shop. We're going to do this. But after the '08, we pivoted and I never said I wanted to do the number side. And so I partner with great lenders now.
Wonderful. Wonderful. Well, we're so glad. I was telling them, like, I remember when I first met you, and I'm just giving people time to hop on. I
Yes.
remember just being so, and I still am, and if I haven't told you this, I'm just so impressed with
You.
you and just your discipline to your faith and to your goals and just how you carry yourself. It is such a joy always to be around you, and
Thank
it's great when you meet other believers who have good work ethic in the marketplace,
you.
and it's like
Yes.
there's no code switching. Literally, you are who you say you are. And I've just watched you grow your company, and can't wait to see what else you do and how it benefits
I'm
the kingdom.
excited.
So,
Thank you. And thank you for sharing that because, we are our hardest critics. And so when we look at ourselves, like I look at myself, I can look at the things that I'm not doing and feel opposite, like, man, I'm not
mm,
disciplined. I'm not that. I'm not this. And so I appreciate you sharing that because that helps me be like, okay, girl, you're doing right. You're doing okay.
yeah,
Like,
no, man, you're doing phenomenal.
thank
Just keep
you.
it up. If there's areas where you feel like you can grow, you do that. But
Yeah.
from where I stand, 10 out of 10 would recommend. 10 out of 10. All right, so I want to talk about these FHA rules. One,
Yes.
is this a real thing? Because on the internet, on the
The
internet,
internet be internet.
and you don't know what's real, what's not. So are these rules, this FHA rules, where they have lowered the minimums requirement for
Yes.
credit? Is this a real thing?
It is a real thing, but here's the thing. You still need decent, good credit. Like, you still need to pay your bills on time. You still need to have great credit character. So, where they are not looking at the credit score, where, like, if you have below a 620, and it's Fannie Mae, which is a conventional side, versus FHA. So, FHA is still requiring that 580 minimum or 500 score if you have like special things, more cash, or certain like that. But Fannie Mae is on that conventional side, and conventional loans are typically a little bit more lenient, but they have a 620 minimum credit score. And
Okay,
so,
so hold
okay.
on, because I don't want to assume that
Hmm.
everybody on this call understands the difference between FHA
Hmm.
and conventional. So let's say that there's someone here, they know they want to buy a house, they don't honestly know what's the difference between FHA and conventional.
Yes. So FHA is a government backed loan, and conventional loans are from private lenders. And
Okay,
that's the bare minimum basics.
perfect.
FHAs are typically easier to get because of the lower credit threshold, and they have a lower down payment requirement. And then they have some lower limits and different things. So if you have a no FHA, if you have a score of 580 and you have 3.5% down, then you can go and probably get an FHA. It might be better too.
Okay.
But with a conventional, you have a little bit more flexibility on the loan requirements because it's a private lender. They're not as strict as a government lender. And then you also have different programs that it's just more flexibility on what you can
Okay.
do when you have a 620 or higher and some money to put
Right.
towards the transaction.
I'm glad that's what I was going to say, because typically with a conventional loan, you have to put down just a little bit more,
Like
not just,
5%. Instead of three and
yeah.
a half percent, you put 5%. Typically, now each case by case basis, but typically 3.5% is for FHA, 5% is for conventional.
And
But
so
with
for
go
you,
ahead.
so for those that are trying to think, okay, so I want to buy a house, FHA.
Hmm.
I heard, like, there's down payment assistance programs and 3.5%. right? That could be, less than $10,000,
Yeah.
or we're talking upwards of $20,000, $30,000 for conventional. So that's why most people tend to go with an FHA loan, because it's
Mm-hmm.
lower upfront costs to get into
Yes.
a home. That's the
And it's
benefit.
it's easier. Like most people or most lenders are gonna probably lean you towards a FHA loan if you have below a 640 score.
Okay.
Like that's
Now,
typically you're just gonna go and that's where they're gonna lean to. Now, not that's not you might not end up there, but that's probably where they're gonna start the process, is looking at the FHA process.
now I'm going to ask the question, because, if somebody has a 580 credit score, should they be looking at buying a house?
If someone has a 580 credit score and they have stable income and they have some money to go towards the transaction, and it's just like credit and your credit is you have opportunities your credit just for things that happened in the past, I would say it's worth exploring at a house because you can afford it. Now, if you have a 580 credit score and you have a recent late pay within the last 90 days, I do not think that buying a house should be your top priority, because there might be some money management or some money discipline things that should be top priority to get you in a better space to not only purchase the home, but also stay in the home.
So I want to stay there for a second, because a lot of times when I meet people, and we're not working together, and they ask me my opinion, I will always ask that question. And I'm like, well, why do you want to buy a house? Why now? Whatever, right? And then I will ask, about their payment history. Do they have a budget? And I will often tell them, you may be able to get into the house, but do you have the money management to keep the home? And that is the piece that I don't, especially with my own story, that I feel like I'm not a hater, but because of my experience and what I know on the other side of this, I want everyone to win. But
Mm-hmm.
sometimes if you don't address your foundation, getting the house is not, that ain't enough, right? You need a little bit more. And it's not even the furniture or the appliances or the wall dressings, right?
Yeah.
And we all want all the things. It's the maintenance of the home that people don't necessarily consider.
Right. And I'm going to say, like, not only is it the maintenance, it's the taxes that come every year because those fluctuate, right?
So
It's
let's
the, if you're buying a resale home, like we were fortunate where we bought a new construction home. A month before our warranty was out, we had a leak in our ceiling and had to replace our sheetrock in the ceiling. And so that's the maintenance that comes with a home. And I am 100% all for home ownership, but it's so much more than paying a mortgage. And people don't talk about that a lot. And then it's also like, let's not get in a home this year and get into a foreclosure next year. It's really not that deep. It's not worth it.
Yeah.
Like, let's figure out how do we get in a home. Let's not be at the top of our budget.
Mm,
Let's understand our affordability.
mm.
And then what all does it take to be in a home? Like, what is the tax rate? And so I live in Fulshire, and our tax rate is fluctuating every year. Every year is boop 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 boop. And so and that's a thing. And it's like, oh, okay, that's fun.
So I had a very similar story. I bought my home, the home that I'm in right now, and this year was and I've been here almost, no, it's 10 years. No, it'll be 10 years next year in February. I know. Listen, I will move quick. But this would be the first year that my taxes have leveled out
Mm,
every year, because it was new construction.
yep.
And even though they finished in my section of the neighborhood, they were still building in the neighborhood. And
Yeah.
every year, my taxes went up and up and up, to the point where whatever they quoted me when I first bought this house about my tax rate and all this other stuff, it ain't never been that. And that's the part where people don't really understand. So if you're going to buy, and you don't want to buy a pre-owned home, you want new construction, that $2,500 mortgage payment when you first move in may not be the $2,500 mortgage payment that you have the next year or the year after.
And the part about that is you really need to be very intentional about what partners you're having on your team, because that could you could be better prepared when you purchase your home. So there is a way that the lender can evaluate the taxes as if it was like just land if you're buying a new construction, and that's probably will be your first year. And there's
Mm-hmm.
a way where they can evaluate the taxes where it's as real property, and that could be your first year, and that's
Mm-hmm.
going to look closer to what it's going to look like for the remaining time in there.
So what
But
I'm
that's
hearing is
something
I
that
ain't had the right people on my team. That's what I'm hearing. That's what I'm hearing.
that's what I heard. I
Listen, because I
and
didn't know.
yeah,
I was in
and you don't
tears.
know until you're in there. And then the other part about that is you're trying to get in the house. So sometimes they will fluctuate the numbers so you can get in the house. But that's also why don't buy at the top of your budget. Because if you can afford that, and they're like, hey, it might be off $800, $900 next year, you're like, oh, that's fine. Like, I'm not at the top of my budget.
Right. So I want you to clarify when you say at the top of your budget, what that means. Because when you say at the top of your budget, you mean something very different than when I say at the top of your budget.
Yes.
So when you say at the top of the budget, tell the people what you mean.
Yes. So if you're buying power, your pre approval is $400,000. And $400,000, that just says a $3,800 mortgage. That's the max that you can get approved for. That's the top of your budget.
Mm-hmm.
Because the lender has looked at your debt, your income, everything in between, alimony, all the things, and said, this is how much you can afford.
Okay.
So let's not
So
be at the top of our budget when we're
no.
purchasing a home. Because like even in our situation, my husband lost his job 2 months after we purchased our home.
So if you was at the top of your budget
We would be
and,
out of
and you were spending based on having two incomes, that could have been very disastrous financially for you
very
all.
much. And I'm a plug FHA because this is what we were able to do a loan modification. And conventional doesn't always allow this.
So there are some options that are available to you, right?
Yes.
And here's what I want you all to know. And I want to have this conversation because a lot of times it'll come across as somebody hating, right? We don't want you to
Mm-hmm.
be great. That's not it. I want to educate you. And why are we doing this in December? So that when you start making your goals for January, and then you start making your budget and your how you're spending your money and saving, I want you to have all the information so that you're not just walking into a situation buying a home and you're not knowledgeable, so
Right.
you're armed with information. So I say that to say, now you just talked about loan modifications. So you can qualify for loan modifications as long as you're not out here wilding out with your credit as soon as you close on your home. What does
Absolutely.
that mean by that? Meaning you have to have your foundation of managing your money pretty set so that once you close on your home, you're having a conversation. Here are the appliances that we say we're going to buy this quarter, this year, and then we'll wait, we'll save up. Because if you are exhausting all your resources and you're just out here charging, and now you got a Lowe's credit card, Home Depot credit card, all this other stuff, going to go talk about a loan modification or refinancing, if something was to happen, you don't have any extra wiggle room.
You have no leverage.
Yep, no leverage. That's good. That's good. That's
Absolutely.
good. All right. So
Mhm.
we've talked about debt to income ratio. We've talked about don't be out here buying. If you get a pre approval, don't buy
Don't
at the
buy at the
top of your
top. Now, unless you just have not reported all of your income. Like so for me, when we purchased a home, I was working. So I didn't report my real estate income because I didn't have to. Now it's different. So if you're having income and you know this is our top of our budget, but we have an additional $80,000 that we make annually, then you might can afford the top of your budget. You maybe can afford your top of your buying power. So it's case by case, but
Can't say that again. It's case by
case
case.
by case, you have to know your
Okay.
situation.
So now, if you are able to get a house but not report $80,000 of your
That's the case,
income,
right? It's a significant amount of money.
okay? I just want to make sure I don't want y'all getting off this live. And she was just like, I mean, it's case by case, so I can do
I
it.
make $20,000. What you talking about?
Okay. Right? But I would even go so far as to say, even if that's the case, does it make good, wise financial sense to do that? Because if you have unreported income, could you pay your house off faster?
You
What do we
can.
say we value? Is there anything else that we want to do with this extra pot of money? What could we do with that? Is that traveling? Is that buying rental property? Is that buying a building? Is that buying land? Like what do we want to do with this unreported income instead of mortgaging it and
Yes.
buying more house?
And now we're using that income to do our basic necessities.
Yeah.
And
All right.
unreported does not mean not reported to the IRS. It means I didn't tell my lender.
Oh, wait, I'm sorry. Run that back. Run that back. But the people, I want to make sure we clear. Like
No,
if we
because I
cut this,
don't
I
want the
want to make sure we
IRS looking
clear.
for me. Unreported, I report. We do our taxes. Unreported is I didn't show all my money to my lender.
All right. Let's clear it up. We don't need no problems. I love it. All right. So hold on before we move on. I want to go back and make sure I'm not missing anything in the comments. All right. Hey, y'all. Thank you guys so much for joining. Yes. So someone said 6 months after they bought their house, my roof blew off. Let me tell you something. I don't, I don't, I don't remember having this many problems in my 2015 build house that I had in the house that we grew up in
Just
that was built in the 80s and the 90s. And we've had several contractors. We have a home warranty. Even before the initial warranty, we just have heard that the materials that they are using in the houses now, they're just not made to last. And we've had P traps replaced. They've had to dig a tunnel under the house. We've had the pipes weren't capped in the kitchen. This just happened last year. We've had some of the most craziest. I'm not even gonna talk about the different leaks in the. I don't know.
I know when we first bought our house, so we have multiple bedrooms and bathrooms, and we didn't use like it's just us. So one of the bathrooms, I'm running the tub I'm like, oh, this don't work. It's a clog.
Yeah,
And so if you don't utilize all of your home, there's some things you're just not gonna know doesn't work until one day.
yeah, yeah. Oh, one of the things that I know we haven't really touched on this, but so did you buy new construction?
I bought new construction.
Did you get your home inspected? Can
Absolutely. I
you
listen.
tell the people? Tell
I
the people.
Please, 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 please do never, ever, ever waive an inspection. Whether you have a realtor, whether you're working with the builder, never waive an inspection because when you hire your third party inspection, that is an inspector who is solely responsible and cares about what you need. When
Let
the
me tell
builder
you.
says, we've done inspections, we've done that, they have, but they've done that to check off what they need for city compliance, county compliance, and all of that. If they might have things that are not required or that's not city or county compliant, that doesn't need to be revised, but however it will hinder you or hurt you as a home buyer.
Let me tell you something, and I kid you not. I've heard so many times, and this goes back to budget, and I know
Mhm.
y'all are like, girl, it's not. It is because when you barely have enough to buy a house, this is one of the first areas that you will choose not to spend because the
Because
home inspection is costly. Go ahead.
yeah, it's $300 to $600 depending on the size of home that you're purchasing.
And so if you barely got enough for that 3.5% or 3% down, and you're like, well, I'm just gonna save it. I mean, it's a new construction. I'm there every day checking on the house,
And
and you
last
feel
time
like
I
that's
checked,
enough.
you wasn't a general contractor.
You're not a general contractor. You don't know. We had our home inspected twice,
Yes.
and the stuff that we found didn't show up on the inspection, right? Like, and even still, and I know when we had the leak in the kitchen, I went back, I went to go look at that inspection report. Like, this did not come up, right? And not to say that everything that comes up on inspection, you should absolutely ask the builder to fix.
Yes.
But do not skip that home inspection. You need to budget for it, even if they say you don't need it. I'm telling you, you do for
You
your
need
own
it.
peace of mind. Get your home inspected.
Absolutely, absolutely. And my inspector, I refer him out to all my clients too. But when we had our plumbing, our issue, I called him. I was like, "Hey, Sam, um, he came. I don't know if he came out or he just took a video or whatever happened, but he was able to tell us exactly what it was."
Same. When we had it, I called for the first couple of years, I would call my home inspector just because I had a relationship with him.
Yeah.
And he would tell me, listen, this is what it is. This is what they're going to probably try to do. This is what you
Yes.
tell them. And he would give me the exact language to go and fight Meritage for them to fix it because should have been covered under
Yeah.
warranty. So that is the beauty of having a community. And also just the peace of mind knowing that, yeah, I could call Meritage and they could say that they fixed it. And then I would call my inspector back out. Hey, they said that they fixed it. Can you just come check real quick? He did that for me for the first 2 years. And I'm
Mhm.
so grateful for that. That to me, now, it wasn't free every time he came out. Let's
Yeah,
be
but typically it's going to be super discounted if you got your inspection through them.
There you go.
And
There
the
you go.
other part of getting an inspection is that you want to know before you purchase this home that the home is in good condition, like that the home is ready for you to move into. Because sometimes an inspection, one, if a lot of things come back on an inspection, whether it's a resale or new construction, that gives you leverage to negotiate off of the purchase price. That gives you leverage to negotiate more seller contributions, repairs. But then it also gives you like making an informed decision. Like this has a lot of issues. I don't want to take this on. Let's find another home.
There you go. And I think that that's another thing too. And I don't know if there's anybody on here that's in their DIY era. I don't know if that's your life. But here's what I will say. If you currently don't have a pot of money, fill in the blank, whatever quantify that is, right now, before you buy a home, you will not have it when you get it to build, to fix, and things like that. And I just want you to be real with yourself because a lot of times we tend to lie to ourselves. Oh, when I get into this home, I'm gonna fix it up and I'm gonna fix all this stuff and I don't need to buy this. And if it's wrong, it's okay. This is my dream home and I'll do it. Nah, sis, you won't. You won't. You won't. And it's costly. So your takeaway here for at least the inspection, get your home inspected.
Yes.
Start saving now, not just for getting into the home, but for when something happens. And I said this on a live yesterday or whenever it was. I think a lot of times we believe, especially with new construction, that we have time because it's a new house. Nobody's ever lived in it before. It's from the ground up. We saw it built that we have this time to build up a nest egg for when something breaks.
Mm-hmm.
Do you believe that that's a myth or is that fact?
I think that you do have time because typically you have at least a 1 year warranty, like
Mm-hmm.
almost bumper to bumper, depending on the builder, less or more, whatever. So I think in theory, you have time. But depending on transitioning from where you're coming from, your mortgage payment, your utility payments, your like increase of living, if that happens and you're jumping from a $2,000 rent to $3,000 mortgage, you're now deducting 1,000 or adding $1,000 to your expenses.
Mm-hmm.
And so, can you now save? So, where
Mm-hmm.
you have a time, where you have a year, I say you have I would say a year is a safe number to say when you purchase a home, you have a year because if anything happens, the people are going to come out and fix it at no cost as long as it's covered under warranty. But if your expenses have now gone up, so you went from 800 square feet to 1,800 square foot, how much is your electric bill? How much is your water bill? How much are your utilities? Now are you paying mud taxes? Now you're paying taxes. Like it's a lot of different things that come into play. So it's like, do you have time? Yes, but do you have the same amount of money where you were easily able to save prior to now that you've acquired the property?
That's good. That's good. Okay, so somebody said that they didn't buy appliances, new appliances for 3 to 5 years. That's wise. So, so wise. If you guys
Mhm.
have any questions about the FHA rules, pop them in the chat and we will be glad to answer them. All right, so
And I
I
want to ask, since we're talking about budgeting, what's a budget for in the beginning, even before you purchase a home?
yeah, let's talk about it.
Yeah, so when you first purchase a home, when you're going under contract, you will have to put your earnest money and option period down. Your earnest money is like your good faith deposit saying, I intend to purchase this home. And your option period is the amount that you pay to do your inspection if it's a resale home. Typically, in new constructions, you don't have an option period. It's all kind of bundled in that earnest money. And this number is typically 1% of the purchase price. So if you're buying a $300,000 home, the earnest money is $3,000. With some new constructions like Lennar, They have a $7,000 earnest money and their homes are like $400,000. It blows my mind.
Wait, Lennar?
Lennar
Oh, okay.
blows my mind.
Okay.
But
Well, is everything still included with Lennar? Is that still a thing?
yeah, like you can still get appliances and different things.
Mhm.
But that's still outrageous because if you go next door and buy a $500,000 house, you're only putting $5,000 for earnest money. So okay, yeah. So it's typically 1% of your purchase price, but they have other builders, or like if you go to Toll Brothers, it's 50% or 20,000, $50,000. So, but if you're in a $400,000 area, typically 1% of the purchase price. And then sometimes your lender will make you pay your appraisal up front, or you pay that at closing costs, which could be up to $700. Then your inspection, which is $300 to $600. And that's money that you will pay before you even get to the closing table. And when you think about your down payment and your closing costs, you pay that at the closing cost, which is a roundabout number of 7% of your purchase price.
So hold on, because you're throwing out a lot of numbers, and
I
here's
know.
why budgeting is important. If you are living check to check right now, and you want to buy a home, and you write the check, and now this is your earnest money, your good faith, and then now you got to get an appraisal. Now you got to get your house inspected. This is why people opt out, right? Because right now, if you're already at your max budget right now with where you live, I'm not saying that you don't want to buy a house, but these are the things that when you come into extra money, you need to be putting that money aside, knowing, hey, this is a goal of mine. I know now how much I need to budget for before we even close. And you need to just put that money in an account and you
Mhm.
don't touch it.
Yeah, and just plan for it because anything could happen, and I think too, like we've all mentioned, the roof, the leaks, all of that, anything can happen when you purchase the home. So I would never encourage if you have $30,000 in your savings, and that is
Mm-hmm.
your all of your savings. I would never encourage using $30,000 that's in your savings to purchase a home.
Okay. Tell me
Like
why.
because then you have no savings. Now, unless you can call your parent, unless you have the money somewhere else, or unless you're young, because if you're younger and you just bet it all on yourself, hey, those risks yield a big reward. But
Yeah.
when you kind of grow up and have like real bills and real car notes and all these things that could happen, it's just like, don't, it's worth the investment, but just plan for it. You just don't have to be out here bad.
I am so glad you said that because that is one of the biggest things that I try to share with people. I don't care if you're young or not. If you have $30,000 saved in your account, unless that $30,000 is going to be the difference between buying a home and being able to pay it off, I just leave it in your account. Pay the bare minimum. And if you want to use that money to pay it off, do that. But having a healthy savings account is always, and if you're able to save $30,000, then I think you're wise enough literally
I
to be
think you're
able
in a
to
better position to buy. You probably don't need that 30,000. But
you,
I'm just saying,
I just wouldn't, I would leave it there. I would not. I don't think that that's wise. I feel
yeah.
like
Now if it's $10,000 and you can use
that's a
10
different
from the 30,
conversation.
yeah. Because here's the other part. And this is again, it goes to having a great team because you can leverage sellers, builders, lenders to get you some money. Like you could say, hey, I have $20,000 saved up, $30,000 saved up. I'm ready to buy a house. And you might be. I'm not trying to make you pay that $30,000.
Mm-hmm.
But I know that you're ready because
Mm-hmm.
you're like, I planned for this, I prepared for this. And so when those things start coming, like those miscellaneous things that come in and out, or the stress of the transaction or whatever happens, it's like I know you're ready, but here's what I'm gonna do. We're about to get these other people money and get these closing costs paid down. Or we're about to get you some appliances. We're about to get you some blinds. What you want? Carpet pulled up. We're about to get your floor. This is what we're about to do to save you some money. However, you need to come in ready and walk out like under promise, over deliver. Walk out like, oh, I still got $25,000 left.
You know what this reminds me of, and I don't know that people make this same connection. So this feels like walking into a dealership with a check in hand. Like it's the same thing.
It is.
I don't need to sit in here with a finance person and listen to them try to haggle me. I, I'm good and I'm ready. Like I know my credit score. I've
Yeah,
already been pre-approved. I already talked to the credit union. They're ready to. All this stuff that you're talking about is not. I'm not interested. They deal with you differently. You show up ready. You know
yeah,
the power and the authority that you have because you have prepared. As opposed to
absolutely.
you
And you're
was
not
out driving.
desperate.
Yeah,
You're
you're
not
not
coming
desperate.
in like, I gotta buy this house. I want to buy this house. I'm stuck on this house. If you know, like, if you position yourself, then you're like, okay, this is way beyond my scope. This is at the top. I don't want to be at the top. This is this. I can't make this work. I'm okay with walking away.
Then things. I love the fact that you said you're not desperate, and I think that that's what having the money in the account set aside for this purchase does. And that's how you know that you're ready for, I would say, home ownership. Because I'm telling you, getting in the house is not enough. It's just having the money to get in, but then you can't really enjoy it. Because let me tell you, if the house don't come with blinds, when you go to get you some blinds,
Girl, it's like $200 a window pane.
you gonna find out real quick. Real, and I
I
mean
still
real
don't have
quick.
blinds.
Honestly, if it didn't, I'm gonna tell the truth and shame the devil. If our house ain't coming blinds, we wouldn't have it either. Honestly,
Yeah,
I'm okay with no
I
blinds.
don't
We just,
have
I mean,
blinds.
and
Yeah,
don't get
natural
me
light
started
is
on
healthy.
curtains. Curtains.
So
It,
sensitive. We got curtains because it's only
let's
two.
let me tell you something. Everybody wants a 20-foot ceiling or 18-foot ceiling until you have to go buy
And
curtains
they're
for.
custom at that point.
These are, you can't get these at Walmart.
They're custom
They're custom, and then you got to pay for somebody to come out and measure
and install
and come back out to install,
and buy the
and,
material.
and you got to buy the material. Yeah.
But you
Mm-hmm.
love your house, so I mean,
But you
hey,
love it.
when you plan and you prepare, it's well worth the investment.
So
But
like
if
I said,
you don't want to be in the house and be for my biggest thing is it's easier to get a home and be like from being evicted, like renting and stuff. You have to come back home versus getting another home after being foreclosed on. So
mm.
why would we even put ourselves in that position when we don't have to?
All right. So because you're a real estate agent, let's just say somebody is on here and they are they had to do a midnight move, so they have a broken lease, or maybe they have a foreclosure. How does this impact them as far as credit? Not just credit, but can they get another home?
You can get another home. Now, it might take some years for to get another home to purchase. I want to say it's probably a 2 year timeline from the foreclosure where lenders will be more open to saying like this is she's had or he or she has been consistent, their credit character is good, they're consistent on their payments and so on. Then you might be they might be open to backing the loan or funding the loan. And
Okay.
as it relates to renting, it's just conversations. You just have to find a landlord that's open.
Okay.
And that's just a conversation, and it might just be a higher deposit.
So let me ask you this. What can someone do right now who has a 472 credit score to, I mean, that might be your story. I don't know. Who's
I
all this?
know.
Right. So they have a
Hey, we all
472
start somewhere. There's no
and,
judgment zone.
and then they have a, broken, what can they be doing right now to actively like start preparing for home ownership in 2026?
I would say if you have a 472, you typically got collections on your account and some defaults. So I would start getting those removed. Now, I'm not the one who say don't pay. I know people say don't pay your defaults and collections, and baby, call them people and settle. I have 1,500. I got $300. Can you take it? Okay, remove this off my credit. So I would say start working that plan. Like stay current on all of your debt and credit now, your car payments, everything. But start removing the collections because those small things start boosting you quicker.
Okay.
That's where I would start. Because the collections are going to hinder you. Like when a lender is looking at it, they're going to say, okay, you need to pay these collections off.
Mm-hmm.
So just
That is
start doing it.
so just start doing it.
Start settling. Like call them. You don't need to pay. Listen, you don't need to pay $2,000 for your credit to get repaired. Call them people because you got that 600, 800, and all them collections on there. Call them and say, hey, I don't have $800, but I can give you 300. Boom, pay that. Hey, I don't have 1,600, but I can give you 800. Boom,
But
pay that.
before you do that, as a part of your agreement, they need to be willing to remove from your
Oh,
credit.
yes, yes. Pay to delete. Yes. So definitely make sure that language is there. But I'm like, before you pay someone to fix your credit, because you cannot, maybe you
Some
can't
of
get it
you,
removed. I don't know. I've
not
never seen it. I've
if.
never seen it.
So here's the deal: if it gets removed from some of these people, I've seen it come back. And what I'm
Oh,
saying right now is just yes. So just if you if you want to talk to somebody about paying somebody to fix your credit or repair them, call me. I have somebody who is phenomenal, but you don't need them. You could do it yourself. But if you want someone that's not going to charge you and then it's going to show back up.
yeah. I'm not a credit specialist. I just know what I did for myself because I had collections. I stopped paying people. And what jumped me significantly was calling them and saying,
And
hey,
settling.
yeah, like, hey, I'm not paying this. And this is the thing, when you're thinking you have your nest egg, that was one of the things. When I had a little nest egg, I started paying debt down significantly. I got them collections up off my thing. I got everything and I got current and like year and now I'm in a good position. But I anytime I got some extra money, it was like, I don't got no money because I gotta go pay $100.
Yeah.
And
But
so
I will say this, that foundation, if you could do that now, it sets you up for freedom later.
it
And I
does.
promise you, sometimes you just need time. So
And that just is what it is. And I would say don't be so the housing market is really crazy right now. And I know predictions say in so many years, like, home ownership will be unattainable. And I believe that. But what I do know too is that we have a God who's most sovereign over
yeah,
everything. And if home ownership is a desire of your heart and you are obedient and you follow his will and his way, you're going to become a homeowner. So
yeah,
many miracles happen, seller financing, like people gifting homes, like things happen. So I would not say don't be so don't put the pressure on yourself that I gotta own a home right now. I gotta do this,
so
I gotta
good.
do that. I make so much money. I should own. Get your foundation in order
So
and
good.
then like trust God to know that he's going to give you the desires of your heart and do the work to have a solid foundation so when you get the
Mhm.
home you keep the home.
And I'm glad that you said that because I think we do get in a hurry and we feel like we're about to miss out on an opportunity. And so we rush it. And then we get out there before we really have a good solid foundation. And if you don't want them to rush building your home, don't rush getting into it. And so
Yeah.
build your foundation, get your spending, your debt, get your budgeting in order, and allow yourself the time to build your nest egg. You're not missing out on anything. And I cannot stress that enough.
Yeah.
What the Lord has for you is for you. And while that may be your dream home today, what God's dream for you may be bigger and better. And you just never know what could happen in the future. While you're preparing your credit and you're getting better with budgeting and sticking to your budget and you're building your nest egg and you're enjoying life in the process, right? Because it shouldn't be restrictive. That same house that's new construction right now could be up for sale in a couple of years because of a myriad of reasons. And they've already bought all the upgrades and they've already done all the
It's
enhancements.
turnkey. You
And
walk
it's
into
time.
your dream home, and you could even the Lord would give put favor on you from men. They could say, "We're gonna pay for all the closing costs and down payment. We really just want to give this home away." You
You
just do
just
not know.
listen, and I'm gonna say this, and then we're gonna close it out because I could talk about this all day. And I'm not telling you what I've heard. This house that I am living in right now is a direct example of what that could look like. I couldn't afford this house. We could not afford this house when we wanted to buy it. The only other house in this plan was in Cinco Ranch, which is an hour away from me now. So anytime we wanted to see this house, it was over there. When it came down and the math wasn't mathing, we didn't have the money. But we had already committed. I don't know where we was gonna get the money from, right? When it was all said and done, the way that the Lord delivered and made some things, and we didn't have to borrow, we didn't have to do all of that. It was perfect for us. Like, and I could talk about all the bad things, but this house is a whole blessing, right? And I just want you all to be encouraged, not to be in a hurry,
I would
to
say
get up.
too,
Yeah.
because when we purchased our home, they paid us out of our lease because we were just looking.
Mm,
We had 6 months on our lease. We were looking. I was under contract for another house, and when it was time to close, the house hadn't even
mm,
started being built.
that's
God,
good.
I was like, I'm not about to buy no house. We come down here, we looking, da da da. This is the house we wanted, but they were like, no, it's out of your price point, blah blah blah, whatever. Okay, so I was like, okay, well, we was looking, da da da. They called us. We can get you this house for the same price as the other ones.
Can you? Mm,
Fancy that. And
mm.
so we closed on December 22nd. Like we closed like right before Christmas month end. So we got all the incentives, like all the things. But it all worked out, even to the point when we got to the closing table, something happened with our funding. Like they couldn't find it, da da da. And we said, we told the Lord when we first started doing it, we said, if we have to fight or toil for this, we do not want it.
We don't want it.
So we at the table. They like, we can't find it. We can't find these people. He's like, oh, okay, I would love to go put my check back in the bank.
Quick.
You know, whatever. So we're walking, we're about to walk out. Our lender walks in and she said, what happened? And so we told her, she made one phone call. They was like, oh, the deal's been funded.
We went from being, and I love this story because this is what I'm talking about. We went from not having enough, get to the table, and then we left with a check. And they paid for us to, so the seller wanted to move, and we had to lease our house back basically
Least
because of
back.
whatever.
Mm-hmm.
They ended up, hey, can they overpaid or whatever the case may be, and instead of us having to pay that money back, they let us keep it. That was just, it was nothing but the Lord. Like all of this, but we're gonna have to move and then move again, and then we leased it, and then we were like, oh, they overpaid, and we had to pay them back. It was a lot of rigmarole, if I'm gonna be honest, but it wasn't. It literally was the Lord
It was
showing
divine.
if you
Your steps
trust
in
me.
order, he establishes our plans. Girl, I didn't even know we overpaid for closing until we looked in our escrow. We got a $10,000 check our first year. Now, mind you, my husband lost his job.
Listen, that's what I if
And
y'all don't
so
take
it's
nothing else for this, listen, I know these FHA rules, and then you thinking,
family made
hey,
FHA.
and all this other stuff. If you feel like, okay, now you can, I'm not saying don't. What I'm saying is before you do, make sure that you talk to enough people who love you, but that
Yes.
are also wise, that can give you the advice to just make sure that you walk in wisdom. And that may mean while you can in 2026, it might be better if you give yourself until 2027 and then walk in with confidence in a different financial situation. That's all I'm saying.
Or while
Or,
you can afford this
oh,
$600,000 house, because that's your dream house, there's a $300,000 house that has
come on.
everything you need that you can get in right. And being a landlord is not everybody's thing, but you can just leverage the property better and you buy it now. And then in
Chelsea,
2027, you buy the
Chelsea,
$600,000
Chelsea,
house.
Chelsea, listen, I'm not even trying to be funny. Like, I kid you not. If you guys can shift your mindset, if you're listening to this live or the replay, if you can shift your mindset and buy half of your spending power, you set yourself up and you can hold on to it. You set yourself up, you set your family, your kids up for success in a different level. Because then you can leverage that property for so many other things,
You
right?
can pay it off sooner.
Yeah.
You can afford it.
Mm,
So if you lose your job or this happens or da 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 da, it's okay. It's when y'all in y'all affordability of your wheelhouse, whatever, right?
yeah.
I mean, it's so many things. You can rent it
Yeah.
out because you're not upside down in your rental rates and the mortgage.
It just gives you the passive income, and we'll do another live to talk about what that actually looks like. But I want people to know that you have options, and with
Hmm.
this new rule, yes, you can, which is great, right? Continue paying off your debt, settle wherever it can, but
Yeah.
put yourself in the best position possible, um, so that you can keep your home. Now, nobody asked, and I promise this is the last thing. So there's a rumor out there about 50-year mortgages. So
There is
listen,
a
for those
rumor.
that are
It's
on here, me and Chelsea went back and forth today, and I was like, if the people ask, let's be ready to talk about this. Let me tell y'all, listen, if they pass this, don't nobody listening to this live or the replay, don't y'all get no 50-year mortgage, okay?
unless
No,
there is some amazing strategy behind it, which we were trying to figure out what the amazing strategy would be. We haven't found it yet. But you're gonna pay so much interest, and if and it might take down $300, $400 of your mortgage. You can buy a house that's more affordable and adjust your
listen,
mortgage. You can buy down your rates. You can put that money. I mean, there's so many different options on how you can make your home affordable.
then
And a
50-year
50-year
mortgage.
mortgage, I just don't see how you would even be able to leverage your property because the equity is going to grow at a slower pace.
Yeah, just no. And if you think I'm a hater, I'll be that. The answer is still no. Like it's just the math doesn't math. It doesn't make any sense. All right, so somebody said, Akila said that she needed to hear this more than she knew. Thank you, Akila, for joining and for tuning in. I really want to educate people. Again, if you're joining late, the reason we're doing this in the month of December, so go back. I'm going to post this on my page. I want to educate people on their goals so that when you set them in January and you start budgeting for them, you are armed with knowledge, right? Yes, you could go read it for yourself to verify, but I'm telling you now, these are trusted people. We want to see you win, but we want you to just not just win for a little bit. Let's win for a lifetime
And beyond.
and beyond. Yes, because it's not just you, especially if you're in your late 40s and you're wanting these things, you're really planning for your legacy, right? And setting them up for success. All right, so Peaky, lots of amens. Yes, Peaky says obedience is better than sacrifice. Thank you for
Yes.
letting us know that the waiting season is okay as powerful, fearless women. Yes. TF Journey said, are we trying to buy a house to prove to others or because it makes sense to your bank account?
That's good. She's a budget bestie too.
Listen, let me
That's
tell you something. Because you can buy a $600,000 house that has more square footage, bigger lots.
sure.
And if you can afford it and that's really what you want, cool. But if you need a home with some bedrooms, a place for you to gather, a place for you to cook, a place for you to go refresh
Yeah,
yourself.
that aligns with your lifestyle. Like just understand where you are, right? And
Yeah.
it's one
And
thing one
whatever that looks like for you, but just think about what you say you value. For those that are in the budget challenge, we talked about that tonight. What do you say you value? If going on a trip once a year is what you value, cool. Does a $600,000 house and what you make, if you
afford that. Because
can,
that's
if not, what if you want to? I want to go twice or three times a year, once a quarter, once with my family, once with my girls, once with my man, once by myself. Can I do that? If that's what I say I value, and my mortgage is $6,000, let's get in alignment. All right. So some people are like, no, 50-year mortgage is insane. It is. It is. I don't even want to work for 50 years. Let me tell you something.
don't.
Don't. Won't.
Might got a decade in me.
Ain't even. Well, Chelsea, listen, tell the people how they can find you. If they need a real
Yes.
estate agent in the Texas, Houston, how does that
Houston.
work? In the
Yeah, so
Houston area?
I have helped in Dallas. I do
Okay.
Dallas. But I'm in Houston, in the suburbs of Houston, and then I have a wonderful team that helps me with real estate. So it will be me or someone on my team. My team is my dad, Casey, and Dominique. And I'm with Georgie Johnson Properties, which is amazing brokerage. And so if you want to work with me, work with my team, you can definitely follow me, Real Estate Chelsea, on my real estate page. On my page, it has Lester Group. On both pages, you can click the link, book a call with me, or you can DM me. I'm very accessible. We can set up some time and talk about what your goals are, what your thoughts are, what are you thinking, and I can go more in depth on the process, so you can really be prepared with if 2026 you want to be a homeowner in Texas, you want to relocate to Texas, you want to whatever you want to do. How do I start? And I always say a conversation is harmless. If you're curious, a conversation is harmless. Let's just talk. And then we can figure out the hard stuff later.
All right, you guys, you have heard it here first. Thank you so much, Chelsea, just
Thank
for
you
one,
for having
yes,
me.
and just for also being honest with people, and then educating them on what it is and what it is not. And again, if you guys want to connect with her, I mean, she's tagged on all the posts, and then I'll tag her when I post this. And with that, that's it, you guys.
Yes. Well, thank you. Have
Yeah,
a
thank
great
you
night,
so much. You
everybody.
too. Bye.
Bye.
All right, so for those that are still on, let me just tell you what is coming. You will see this tomorrow, I believe. If not tomorrow, it'll be the next day. So next Tuesday, we are going live again. So if you are, we talked tonight about buying a home and the new FHA. Next week, we're going to talk about what does it look like if you want to buy land. And so the person that I'll be bringing on, her name is Jennifer, and she has done it. She bought some land and built on it, and I can't wait for you guys to hear her story. So if one of your 2026 or 2027 goals is to purchase land, maybe you want to build a family compound, a friend compound, maybe you just want to build your own compound, and you don't know where to start. If that is a goal, we're going to be talking about not just how to do it, but also how to budget for it. Again, the purpose of this series for December is to educate you with the information. If you say that this is a goal, you're interested, you've heard, you just want to know more, I want to do that, and we're going to spend some time talking about that in December. So if it's something where you're like, hey, can we talk about this? Drop it in a chat. Let me know. And if you want to continue this into January, I mean, let's go. I'm here for it. But the point of that is in January, most of us make our New Year's resolutions. We start thinking about what do I want to do and what do I want to accomplish this year? And if buying a home, getting your credit together, buying land is part of those goals and it aligns with your value system, I want to make sure that you have enough information so that when you start budgeting and saving your money, you have enough information to move forward. And then you don't necessarily need to have a conversation because we're doing it right now, right? It's free. That's why I encourage you to not just tune in, but to ask the questions. And if you're like, man, that was so good, but now I have questions, then you just hit me in the DM. I'm extremely accessible, right? If you want to talk more about, okay, yes, this is what I want to do, and I want to actually start budgeting for it, and you need some accountability and some help, I can do that. Yeah, there's a program for that. Absolutely. But if you just need the information, just tune in. I'm going to try to keep these going every Tuesday for the month of December, and we'll see what happens in January. All right. I appreciate everyone who said, oh, I'm glad that this was on time. I'm so glad. Thank you so much for joining. Listen, we always talk about investing. Let me, I can do that. I can add that. Let me write that down. Absolutely. What type of investing do you want? Just, you want to just talk general, or if you have something specific, do you want to talk about stocks, day trading, insurance, IRAs? Let me know. But yeah, if there's anything else that you guys are interested in, please let me know. I want to make sure that you guys are educated. Yeah. All right. That's it. I have nothing else. I appreciate you guys. And until next time, happy breakthrough.